Theron, it's been an age, and I'm looking forward to updates from your side, specifically in terms of the markets. Very interesting elements afoot as we await the cabinet in South Africa. Give us a sense of where you are at in the markets right now, sir.
Yeah, Bronwyn, it has been ages since we did that TV show together, but we used to focus a lot on JSE equities, but our investment business here at Vestact has shifted almost entirely to US stocks. So we're still entirely Joburg based, but our clients are mostly invested in global markets. It's been extremely tough for locally listed shares to thrive. So I guess the real question is, how's it going to look? If we do get a government of national unity and there's some credible pro-business politicians installed in key economic ministries, because that could usher in a new era. I mean, let's be optimistic. We could see a bit of a value re-rating of some of the core South African equities. That would be great.
Have you positioned yourself for as such? When you say largely Vestact's portfolios are offshore, but is there a bet to be had on the South African market, in your opinion?
Well, we have not. We've got about 12 billion rands under management, of which about 11.5 is in New York, direct US equities like Apple and Visa, and Nvidia, and the likes. Our South African asset management business is residually positioned in stocks like Richemont, Naspers. I mean, we do have small holdover positions in stocks like Discovery, Aspen, and the likes. So you'll remember the names I was always droning on about. We also have quite a lot of South African investors who are trapped in trusts and that sort of thing, invested in the S&P 500 listed JSE trackers. So that's a bit defeated. But I would say, a stock like Discovery is interesting. I've got a personal stake in Discovery. My daughter works for the group in London. And, I kind of think, for me, it's interesting as to whether or not there may not be a re-rating there, because who knows, maybe the NHI pipe dream that ANC railroaded through in the last few days before the election, will run properly off the road. And it ought to be. So if that were the case, Discovery's medical aid business might be viewed in a different way by the investment markets. So let's see.
Well, you've never been one to shy away from the growth story. Let's talk about some of those stocks you mentioned, Apple and Nvidia, from an offshore perspective. Obviously, this goes back to 5-6 years ago. They were in your portfolio. You were not holding back. Are you still advocating in favor of accumulating at current levels?
Yeah, absolutely. The big picture global outlook is of, progress across the board. We had a very difficult start to the decade, what with COVID and that sort of stuff, followed by a shocking 2022 where inflation appeared to be flying out to unheard of levels. But I think we're now back where we need to be. Sure, there are some regional conflicts, most notably the one in Ukraine and the one in Gaza. There are potential issues and flashpoints in the Southeast Asian environment. But broadly speaking, companies are doing well, consumers are consuming, people are traveling, tech companies are doing well because people value those services. People selling stuff want to advertise on those social media and other platforms. So I think that's where you've got to be. The AI stuff that's coming down the pike, that's been a pleasant surprise. Who knows? Some people say AI is just fancy autocorrect. Others have pointed to real value that it can deliver in industries where the function of the work is to deliver words. That can be really powerful. And video, of course. So there are many industries for which this appears well positioned. You'll remember 5 years ago, I was going crazy because our holding in Tesla was doing so well. Now, we still own that one, but it has not done so well lately.
Not done so well. Can I remind you that we are taking significant pain on Tesla? So reverse your decision on that. Are we holding it for the longer term? You still believe in Elon Musk?
Yeah. So in other words, that one rallied, if I recall rightly, if you look at the 5-year chart, one could confirm this. But I think it hit an all-time high somewhere around 2021. And the whole market post-COVID rallied hard, any tech type stuff. So it since then has really struggled, I think mostly because there's a a sense in the developed world that people are not falling headlong into pro-green economic policies across the board. There was a time when people were saying, we've got to shut down these coal-fired power stations like yesterday. And you've seen a pushback from that. So the electric vehicle market is not nearly as receptive as it was before. Governments are not giving out such big subsidies. But there really isn't anything else if you want to invest in renewables and green technologies and batteries and driverless vehicles and so on, other than Tesla. Everything else is vastly less attractive. So I think if you want to be in that space, yes.
If I'm hearing you loud and clear, you're saying get into Tesla now. This is a buying opportunity, Paul?
I would say so. I mean, if you don't own anything that has, comparable industry focus, then I would say that's fine. I mean, most of our Tesla customers are hanging on to the stocks they've got. A couple of them are still in, significant profit because they bought them back in, 2015, 2016, 2017, and thereafter. Those that bought them at the highs are feeling a little grim, but we're telling them to sit on their hands. And sure, if we've got significant client arrivals, we've got sort of a stock portfolio in the US, which is about 15 holdings, then we'd be buying them, that one as well. But we'd also equally be buying them NVIDIA, even after this stellar run that it's had.
I'm not surprised. As I said before, you're not shy of buying in at all-time highs, are you?
No, that's a good thing. If the stock's at an all-time high, it's a strong buy signal. I mean, it might sound a little absurd, but stocks making all-time highs tend to make new ones. Sure, there's every now and then something that, kind of gets a little bent out of shape. But with large cap stocks making new highs, in my opinion, that's generally a buy signal. Because, big companies that dominate their industries and have tremendous margins and growing sales tend to go on from strength to strength.
You mentioned 15 stocks. Give me a little more clarity, if it's not proprietary information, on where we can look into those 15 stocks to get further clarity on your perspective, other than the top performing growth stocks.
Well, I mean, we've evolved a strategy, as you may recall, of being quite focused on technology and healthcare. So if you go to, public websites that display all of the S&P 500 constituents and rank them by their market value, you'll see that, tech is a big part of the market these days. But there are also sectors like, consumer and financial services and basic materials and real estate and all sorts of stuff. We tend to avoid those and focus on technology and healthcare. So healthcare, is companies like Eli Lilly that has these weight loss drugs and others which are doing spectacularly well, and we think it's got a lot of potential. But it also is companies that make medical devices like Stryker and so on and so forth. Amgen is another one. So we like those stocks. And then we do have some residual consumer exposure, but I must confess that's been tough, because the problem with consumer stocks is that, if you're in retail, that ranges from, specialist high margin retail like luxury goods all the way through to, big cap supermarkets like Walmart and Target. And the problem with that spectrum of stocks is that there's always somebody who seems to be doing well and capturing market share, and someone who's screwing up and losing it. So it's very difficult to have a very long-term lens with regards to those. We also typically invest in, mass affluent luxury has been something we've been quite keen on. So one of our current holdings, which we've held forever, you'll remember, is Nike. But also it's down 15% this year. They're grumbling about inventory overrides, all that kind of stuff. So broadly, we'd like them to wake up. They've actually got results out tonight. Let's see how they're doing. And they've got the Olympics coming up in Paris, where they're going to launch a whole lot of exciting new stuff. So let's see.
Are you anticipating a good set of results and maybe a rally into the share price?
Yeah, maybe, because a lot of the problems they've had came from inventory management. So what happens with a company like that is, they design new Alphafly shoes or Zoom flies or whatever you like to run in, and they produce a certain number of those, in their various locales. And then if they don't sell well, they have to discount them and delay new models until those have gone. And I think they've largely achieved that. So what happens with their results is sometimes you'll see, big miss, inventory drawdowns, but this should get better. So we're in a bit of a doom cycle with them. But another thing that you'll remember is that I'm not a big seller. My general view is if you own something that has a quality balance sheet, quality management team, quality brands, you should hold on. But having said that, sometimes these companies can test you for too long.
Let's go back to the healthcare theme, because we haven't chatted since COVID, and you must have seen incredible returns with your healthcare play over the COVID period.
Well, that is interesting. Not universally so. So certain parts of healthcare did badly during that time because there were fewer hospitalizations. So the medical device makers, the hip and knee and joint replacement people actually did poorly. Then companies that were in vaccine development went to the moon. I mean, Moderna was up like a rocket ship. At some point, it was the largest and most valuable healthcare company of them all. Pfizer did well. BioNTech, the company that worked with Pfizer, German-based developer of the vaccines, did well. But the minute they, stopped selling those things because people didn't want to get injected anymore, they fell hard. So Moderna is still way below where it was at the highs. So it's a tricky thing, remember.
As you said, you hold through cycles. So Moderna, I take it you've held through the up and the down, and you'll expect your re-rating because you believe fundamentally in the stock going forward.
No, in fact, we didn't ever buy Moderna for clients. We kind of looked at it. We had a few clients who nibbled it, but we didn't ever make a widespread recommendation. No, we owned Johnson & Johnson, which you remember did have a adenovirus, less fancy vaccine, which proved afterwards to be, not particularly effective. So that kind of caused a bit of a rush up and a rush down. But the other point I wanted to make is that if you're a tech company like Microsoft, right, and you invent, new AI tools to sell your Office suite, you can carry on doing that every year and making more and more money from premium users. In the healthcare game, you get a 20-year patent protection, and then everybody else can come after you with generics. There's some provisos to that. Sometimes what these companies do is they make slightly better versions of the drugs, which they combine with other ingredients. Then you end up with, an extension. But in general, healthcare is a less attractive business than technology. However, we think these weight loss drugs are the business. I'm not sure if you followed that sector, but I think that thing is going to go big.
I have followed, and I was chatting to David Shapiro last week about the weight loss drugs, specifically Mounjaro, which Aspen has access to through the Eli Lilly partnership. You mentioned Aspen as a play earlier in our discussion. Talk to me a bit about Aspen and the future as you see it.
Well, again, that's a stock we've owned for South African-based investors for 15 years. It's had its ups and downs. I love Stephen Saad, but, the mission that he embarked on, which was to globalize the firm, didn't really work all that well. They had some successes, and ironically, when I was wandering around Munich last week, the Gay Pride event was on, and the medical tent at that event was sponsored by Aspen. So they must have a German-based division, which, is in the consumer environment. You're right. They do have the right to produce Mounjaro and Zepbound for Eli Lilly. And I think that'll probably be a good, positive relationship for them. But you remember, those things are largely deals where the margins are quite low. It's a manufacturing relationship. The intellectual property and the product development margins will continue to be received by the multinational. So I just think that the weight loss drugs are a big shift for humanity because, for 99.9% of our evolution as a species, there was food scarcity. So we evolved to be hungry more than we need to. And now that we live in an environment where there's fantastically tasty food everywhere, it's a serious problem. So we all need help in turning off our urges. And these drugs have fabulous effects in that department without any seemingly worrisome side effects. And as you know, the drugs were used for diabetic treatment for decades already. So that's why we know that they're safe. So I honestly think it's going to be a big seller. And for medical aids, it's a no-brainer. They haven't embraced the concept yet, but they've got to pay for these drugs because then their premium payers will last much longer and the economics will be much better. And all of the terrible things that happen to people because they're heavy will happen less. So I'm a big supporter of this, although obviously I'm a biased shareholder, so I do tend to go on a bit.
Now, this is Eli Lilly is your international player here. You're still in Johnson & Johnson, correct? And perhaps also just touching on the wearables. You spoke about Stryker, you spoke about, because that predictive wearable device that can monitor your heart and monitor your cholesterol, etc. That's what you're talking about when you say that the future of health tech.
That is indeed another subset of the medical devices, medical technology field. And there's a crossover to Apple, because remember, Apple is probably our most widely held stock. It is not our most valuable stock anymore because it got overtaken by NVIDIA doing so well. But the vast majority of our clients own Apple. And Apple has had an interesting foray into the wearables arena. They obviously have their Apple Watches. They haven't rolled those out quite as fast as people might have thought. The fancy, expensive Apple Ultras do some of that, but the ordinary Apple Watch, as far as I know, doesn't have a functioning in-device glucose sugar level monitor yet. So there's some issues there. But, I think just generally it's one of the things that takes us further. I was just thinking about this, reading a story today about Google, another holding of ours, is driverless car service, Waymo, which will be launching in San Francisco. People who are as old as I am grew up not entirely trusting computers and definitely didn't trust an internet connection. So, you would generally experience that the service was offline. It didn't worry you if you didn't get an immediate response from a computer because you assumed, they only work half the time. So go from there to with the world in which we live now, where largely people trust data that's collected, that goes by your cell phone or that you retrieve, as you're connected, to the point where people are prepared to get into a vehicle which is driven, autonomously. Because I can tell you, anyone over 60 is not going to trust that car. They're not going to get into a driverless cab on the streets of Johannesburg. But anyone under 30 probably does.
And of course, a youthful population globally is what we are working towards when it comes to those things, particularly in Africa, Paul. But I want to go back to Richemont, because as long as I've known you, it's been that luxury goods play and the robust consumer. We've had so many conversations about this, the robust consumer at that high LSM that doesn't get impacted by economic cycles. Richemont, you're still accumulating.
Yeah, the luxury goods industry is fascinating because obviously South African investors typically approach it through Richemont simply because it's South African origin and it's available to invest in it on the JSE. There's a broad spread out there. LVMH is in some ways a much broader and more reliable way to invest in the sector because they've got, fancy goods. The handbag business is incredible. They have jewelry, they have booze. They've got a bigger, mix so that as one may be doing well, the other is doing less well. Richemont obviously is high-end jewelry and wristwatches. Now, I don't know how you're feeling about wristwatches. Personally, I'm not a mechanical wristwatch wearer. I only use an Apple Watch when I run. I don't use it apart from that because if I want to know what the time is, I look at my cell phone, which is never far away. So I would, if I was an international investor, I'm not sure I would buy a Richemont, of the mix that's available. Hermes is an amazing company and has amazing products and is incredibly well run. That's another option. But, if you're in South Africa and then you've got limited options, you can do a hell of a lot worse than buy Richemont on the local market. It has a global business. It's got a business that does well in Asia and Europe and the United States. They are run seriously. They are conservative, all of those boxes that are checked. So yes, definitely still a Richemont supporter. I think you might have noticed there's a story doing the rounds about the LVMH possible interest in Richemont again.
How do you think that's going to pan out?
Well, I don't know. My colleague Bright Kamalo was getting very excited. He likes the sector and he thinks it's the beginning of a hostile buyout. But I don't think so. As far as I could tell, it was more that the Arnault family has an investment vehicle and that they sometimes accumulate stakes in other businesses just because they like them. Because the shareholding structure of Richemont, as you know, gives the Rupert family continued control through different classes of voting shares. And as far as I know, Johan Rupert wants his children to succeed him in running the business. His son is already on the board. So I don't know. I don't speak to him, so I don't know what he really wants. He could get a whole load of LVMH shares and then just carry on playing golf the rest of his life, and his children can sit on the board of LVMH. I don't know. Maybe. Who knows?
I'm sure you might actually solicit that call from him very soon. He's going to give you an update on his succession plans. L'Oreal is something that I have to talk to you about because, again, as long as we've had these discussions on the markets, the lipstick indicator, L'Oreal beauty products, it's been your play. And you've got the fantastic story about the founder. Update me on L'Oreal. And I am correct. This is still something that features strongly in your portfolios.
Yeah, interestingly, you've got a good memory. L'Oreal, you're right, is a stock we've owned for clients for quite a while, although we actually stopped buying it. I'm sorry to have to report. So we have about 60 clients who still own it and about $3 or $4 million worth of the stock in our custodial setup in New York. But we stopped buying it for a couple of reasons. Firstly, because it's French. And secondly, because it has an extremely high dividend withholding tax rate. But those two, of course, are linked. So European companies tend to trade in their primary markets, in the case of L'Oreal in Paris, and then they trade on a secondary basis as American depository receipts priced in dollars in the US. And when you get a dividend from them, instead of having to cough up 15%, which is the default in the US, you have to cough up 35% to the French government. There are also some marketable securities taxes which you have to pay when you buy them. But it remains a very, very good company with great upside. I guess what you could take away from this is that there are lots of choices, and it's the question of, where you want to position yourself. On balance, I would say if you really like the sector and you think that the luxury end of the consumer goods industry is where you want to be, you probably would do well to buy 3 or 4 or 5 different stakes, from something which is pretty mass-oriented, like Nike, all the way through to something like a Richemont at the top end, because they will definitely have their moments. There'll be times when they do well. There are times when they lose a creative director. They have a bit of a down gear, and you have to hang on. Because, trying to chop and change and buy and sell and, kind of react to the market, by which I mean the consumer market as well as the share market, can be very tough. And you tend to get the timing wrong.
So, Paul, my last question. Often people come up to me and go, how is Paul Theron and what is he doing, etc. It's a hangover from our hot stocks engagements for many, many years. So, of course, I have to say to you, the hottest stock that you want to put to us today of the numerous shares that you've spoken to, and it's great getting to understand and drill down into your international portfolio, understanding your local portfolio again. But Paul Theron, the hottest stock.
That's interesting because, of course, sometimes people are buying or investing in the markets for, longevity rather than for short-term returns. Yeah, I suppose you're talking about the stock that has the greatest upside for sort of short-term growth as a potential reaction, for example, to quarterly earnings that might be coming. Because, I can't say something like Microsoft because, hell, everybody owns that.
You dig harder than Microsoft.
Yeah. What I'm going to say is I'm going to dig into our share portfolios for another stock, which we haven't mentioned, which happens to be in the healthcare sector. That's Amgen. So Amgen is interesting because it's a diversified healthcare company with a whole bunch of biotech products. But they have a weight loss drug, which is in phase 3 testing, which actually is a once-a-month product and is also oral. You can take it orally. So, the weight loss thing currently is injection-based, and there's a lot of people on the planet, bless them, that will not inject themselves under any circumstances, not even with a pen-type injection device. So the oral thing is a tricky one, though, because, the minute you throw something into your digestive tract, 95% of it gets obliterated by the hydrochloric acid in your belly. So it's a tough nut to crack. But I think Amgen's product coming down the line could be attractive, and I think that could be sooner than people anticipate.
Yep.
But look, I think also the likes of stocks that have done well already, the Nvidias of the world, keep buying those too. Those are pretty hot as well. Make sure you got those already.
You're a good sport, Paul, and I'm sure we're going to have many more conversations of this nature. But certainly Nvidia, Amgen, good to go on those. And I hope you have a great weekend. And looking forward to more engagements. It's good to be engaging and having these conversations again.
Yeah, nice to be able to do it on this platform. It was easier than having, like we had in the days before, having to jump into my old Mercedes-Benz and come to the studio in Santa.
Although you tolerated the bright pink studio so well, I always thought you were for the bright hot stocks pink studio, but lots more to come. Your Vestact, a pleasure.
Thanks, Bronwyn.